Good morning, welcome to Ainsley News. It's Thursday, the 22nd of October. It's good to be back in the seat here. I've taken a brief break. Done a great job while I've been away. Today we're talking PayPal and CBDCs and how we're going to have to listen carefully for what's next. Fiat currency, as we know it, is under attack. We wrote to the advent of central bank digital currencies, or CBDCs, recently, including the opportunities but also some of the threats they present. Last night we saw the announcement by the world's biggest payment provider, PayPal, that they will now facilitate cryptocurrency transactions. This is from their press release. The migration towards digital payments and digital representations of value continues to accelerate, driven by the COVID-19 pandemic and the increased interest in digital currencies from central banks and consumers. PayPal Holdings Inc. today announced the launch of a new service enabling its customers to buy, hold, and sell cryptocurrency directly from their PayPal account, and signal its plans to significantly increase cryptocurrency's utility by making it available as a funding source for purchases, as its 26 million merchants worldwide. Going on to bring in the CBDC aspect, the press release also says, mainstream adoption of cryptocurrencies has traditionally been hindered by their limited utility as an instrument of exchange due to volatility, cost, and speed to transact. However, the promise of advanced technological platforms offers the possibility of mainstreaming digital currencies. According to a survey by the Bank for International Settlements, 1 in 10 central banks, representing approximately 1/5 of the world's population, expect to issue their own digital currencies within the next 3 years. This announcement, as the list of central banks publicly looking for CBDCs, including the US Fed, cannot be understated. The implications from an investment and wealth preservation perspective are many. As the world quickly starts to understand blockchain technology and digital forms of money, legitimized through central bank and government adoption, the greatest hurdle to Bitcoin and the like reaching their full potential, being ignorance, is actually removed now. Raoul Pal states correctly that there is a mountain of investment capital looking to get into Bitcoin, but the pipework is just not there yet. This movement must and will improve that pipework. Over the last 3 days, Bitcoin has risen 14%. At the time of talking about this, including another surge last night on the PayPal announcement. That might seem impressive, but to put that into perspective and why Raoul Pal sees Bitcoin currently at US $13,000 going to $1 million is easy to see in these next charts. He described the chart last night on Twitter that he posted as one of the nicest, most powerful chart patterns he's ever seen. Note the log scale on the right indicating $1 to $4 million price in this channel breakout. Just take a moment to check out this chart here for perspective. Whilst bullish for Bitcoin as a digital store of value, it is also bullish for Ethereum as the engine for the DeFi space that can only thrive in an environment where banks are looking to be more and more exposed to being cut out of the loop when central banks can issue directly to individuals. The other clear benefactor of the CBDC move could also be gold and silver. The overt agenda of government and central bank alike to move to not just a cashless system, but one where they can directly control all of your money, presents a double benefit to gold and silver, which is real money. Part of their motivation is to better spur on inflation. The current system that sees the Fed expand monetary supply via QE relies on the banks lending out more cash with the newly deposited Fed reserves. That, as you know, is proving more and more ineffectual outside the equities as we remain in a deflationary environment and also in a recession. Put simply, the Fed can't make the banks lend, nor people want to borrow even more. Wealthy investors may be doing so, but to buy more shares, that must inevitably end badly. As the debt burden surges, so does the need for inflation to get rid of it in the absence of real economic growth. Directly crediting individuals in a targeted way, be that UBI or universal basic income or similar, means that they can more effectually dial up inflation. They will know exactly where and how you're spending your money, and they will be able to adjust the dials accordingly. The other mechanism then totally is their control in negative interest rates. The IMF, or International Monetary Fund, have openly discussed a key motivation of a cashless society in that they can more effectively apply negative interest rates, as we've previously talked about, and effectively entice you into productively using your money, causing inflation, and to avoid the penalty of having to have it in a bank, whatever form that bank takes. So As so, we have the dual outcomes of higher inflation, lower rates, and hence negative real rates, and effectively monetary confiscation. That has always been a very bullish environment for gold and silver, where their historic roles of real money where fiat systems fail come to the fore. Check out this next chart here, market value of global negative yielding bonds. Bit of a jump there in 2020, as you can see. Alistair McLeod recently discussed this all and came to the following conclusion, part of which suggests that they might not get there in time before the current fiat system fails regardless. Central banks researching CBDCs are motivated by finding an additional means of monetary inflation to the existing means of issuing increasing quantities of fiat currencies. By issuing CBDCs directly to the public, commercial banks are bypassed, and central bankers hope to forensically target where the inflation is implied. A successful introduction of a CBDC could eliminate the impediment of contracting bank credit, which occurs at the end of every credit cycle. The further benefit for central banks is it will increase their power as an organ of the state at the expense of commercial banks, potentially becoming more important than the state itself. However, the current economic situation is deteriorating more quickly than a working CBDC can be introduced. So the whole exercise is likely to be too late to have any relevance to monetary policy in the foreseeable future. Irrespective, the very pursuit of this agenda and the unstoppable digitization of money and what constitutes real money seems bullish for both precious metals, and the high-quality cryptocurrencies alike. These are increasingly interesting times in which we live, and never before has our trademark been more relevant. Balance your wealth in an unbalanced world. Gotta love Ainsley. That's news for today. Hope you're enjoying the run there with Bitcoin. And a little push up there for gold and silver as well, we've noticed in the last few days. Enjoy your day. Remember, go to ainsleyBullion.com.au for all things gold and silver purchasing. Learn how to sell. ainsleywealth.com.au for all things cryptocurrency. Did you know you can also exchange your crypto for gold and gold for crypto? Just give us a call. And if you're interested in our gold and silver-backed cryptocurrency, which is built by Ainsley, just check out goldsilverstandard.com for more information. Enjoy your day, and we'll catch you tomorrow.